Hi everybody and welcome. My name's Eddie Stevens and I'm here with Nick Healy, Portfolio Manager of the WAM Global Fund. Nick, I want to talk to you today about the US election. It's coming up in November. Before Kamala Harris entered the race, it looked like Donald Trump was going to be the winner compared with Joe Biden. But now the Democrats are rallying behind Kamala Harris. We need to think about this being a tighter race. Just want to talk to you about how you think about elections in terms of how they impact your portfolio construction and how you're thinking about how you would set up a portfolio for either eventuality.
Yeah, so I think the first thing I'd mention, obviously there's a lot of focus being put on the election coming into November. Now this can be a time for significant volatility in the market. I personally recall I was in Chicago in November 2016, the morning after Donald Trump won. Now a lot of hedge funds had predicted this and predicted that the market would move down. It was moving down in pre-trading and then it opened up strongly and a lot of euphoria became dismay. And I think this is just people really trying to get very short-term focused around the election. Our thinking broadly is both candidates are clearly very willing to continue strong fiscal spending, so neither is going to act as a brake on the economy. And it really would be better for investors to not get too short-term in their thinking around the election. What we will be doing personally is taking advantage of any irrational volatility in the market. If I turn to the platforms themselves, so I think the area that Donald Trump in particular would attack would be just placing tariffs on Chinese goods. This could affect manufacturers and logistics companies. We feel really comfortable here. We're not exposed to these kind of names, so we wouldn't be negatively impacted. If we think about the positive side of the ledger, Trump has floated the idea of a lower corporate tax rate, which much like it did in 2017, 2018, would increase the earnings of US stocks. So that would broadly be a tailwind for the fund. For Harris, likely the area she has flagged that could be a headwind is she has mentioned potentially increasing the corporate tax rate. Now this doesn't worry us too much because to do this she would need control of both the House and the Senate. Certainly that's not our base case. So we think this is probably something investors shouldn't worry about too much. On the other hand, she'll be very supportive of the energy transition, the reshoring, and just a strong fiscal approach to industry in the US. We think we're very well positioned to benefit here with the likes of Quanta and Ferguson and other names being key beneficiaries. So I think taking a step back, it's not an environment to get too short-term thinking about. It might present opportunities which we'd take advantage of, but we feel very comfortable in terms of how we're positioned coming into the election.
That's great. Well, as I said, it's a tight race, so it's anybody could win at this moment. So I'll eagerly await the results. Thanks a lot for your insights, Nick.
Thank you.